top three things in my notebook this morning. Number one, the 10-year bond yield in the U.S. Number two, gold. And number three, one of our top three macro themes here at Hedgeye in the first quarter, growth divergences. So first on the 10-year bond yield, an interesting spot. The 10-year just made, or signaled rather, yesterday intraday, and that's why we covered our bond short just from an immediate term perspective. It signaled a lower high from a bond yield perspective. So that's A, number one, that's new, and B, that would be something that we can act on the next thing I want to point out, which is gold. Now, gold, of course, you can trade gold if you understand, the direction of interest rates. So if, in fact, bond yields make a lower high, then gold can make a higher low. So we do get the signal on that, and actually I would be buying gold here today. 1233 is support. That's an important line of support. More important is 1215 as support. So in between 1215 and 1233, I'd be buying gold, and that's just that. Final point on the second macro theme that we have is growth divergences. So if you can't see it yet, you're definitely going to see it if you look at the screen, which is growth divergences, certainly from an equity market perspective for the year to date. So down year to date are countries like China down 4.5% for the year to date, Brazil's down 3%, Turkey's down 1%. But on the ups, you got Europe. I mean, Europe is just ripping. At this point, you got Greece up another 0.7% this morning to 11% for the year. Portugal's up 8%. Germany's outperforming the S&P 500. So again, growth divergences, we do like Europe better than any other global equity asset allocation that you can make. And those are your top three things.